This is 21st day of September 2023, and here comes my gold EURUSD and GBPUSD analysis. And not just analysis. I'm not going to say much. I'm just going to talk about, my entries and why I'm taking those trades. So I'll start by gold, but before I start with gold, I'll talk about what happened yesterday. Yesterday was FOMC. Yesterday, the Wednesday, 28th of September 2023, was FOMC. I was talking about in my previous two FOMC meetings. I don't think, okay, the last FOMC meeting, you can check those dates and those videos I was talking about. I'm not saying US increasing their interest rate more than where it has been, more than where it is already, and also yesterday before, I think 6 p.m. before the 1 hour before the interest rate session. I was also telling you guys I don't see them increasing the interest rate anymore, but that does not affect how market structure has been building. Are you getting it? It might just, throw a lot of people that are trying to, cash those FOMO in and cash those moves. I don't trade fundamentals. That's why you see that I don't trade. I trade, not that I don't trade, but I don't trade in much. But that's not why we're here. We are here to analyze whatever you're saying. And this is, I usually trend my higher time frame structures. That's why you see that I'm a swing trader. So we are actually in these, what we call, um, falling wedge, which is a bearish continuation pattern. But you can see that we're broken back into that falling wedge right now. We've broken back into that falling wedge. And I'll go to the lower time frame to find out whatever is happening. And this is my daily structure. It's trending perfectly well on the daily. So I'll use my 1 hourly, what's it called? My 1 hourly to swing the structure and see what it has for us. So the market is still bullish on the RSI and MACD is still green. So I will not take the bullish side out of the market. So if I take those two Confluences off first, um, I will just first of all check whatever is happening here and probably bring my 20 EMA or my 50 EMA in to see if it can give me any Confluences before going forward. So I usually use all these Confluences. As you can see, the 50 EMA is 20 EMA is trying to find support, but it's not as sweet as trending. So I'll use my market structure to trend. If I want to trend my daily, usually go to my 1 hourly structure, 1 hour time frame to trend my daily because it trend perfectly well on the daily. So previously, okay, let me see. Let me go to the follow time frame to see if I can find anything. And on the follow time frame, all I can find on this particular resistance zone, these areas were previous. I told you yesterday that watch out from your 1940 to 1945. If you go back, you see that they are previous major area of resistance or supply zone. So the previous support that turned resistance again, and we're finding resistance again. And all I can find here are my price action and candlestick pattern. So just give me a reason why we are selling. We are selling because an evening star is happening here, which is bearish, continuation candle to the downside. Are you getting? So it is a bearish, what's it called? Continuation pattern to the downside, meaning that it's reversal to the downside. Are you getting it? This is a reversal to the downside, right? If there's a reversal to the downside, which is a bearish candlestick pattern, if it must prevail, we're about finding out on the lower time frame. Are you getting it? Why is it okay? We're about finding on the lower time frame because whether you like it or not, if you are buying from these areas, are you getting? If you're buying from these areas, that means you don't even know what you're doing because these areas are areas of resistance, or you can call them supply zone. So this was the previous one where this market broke from, even though it did not finish. This was the previous one. So this 1940 to 1945 area, if you didn't watch out for it yesterday and you just seen all this bullish and you're breaking and you're buying without waiting for your daily to close or your foolish candles to close properly, you're on a long thing right now. So as it stands right now, first of all, you can see the bearish pressure trend line coming from the top side, which is broken back into it right now. This was a breaker happened yesterday, or broken back into it. So a lot of Confluences I'm bringing out for you right now. So I told you I will not do a proper analysis. I'm just going to talk about it. So as it stands right now, you knew this was a previous, resistance. turn and broke this candle, turn support. I will try breaking out, but find this major resistance. So you're not supposed to be viral. That's why I said, okay, wait for the aftermath of what? Wait for the aftermath of, FOMC before you make some decisions. And as you can see, this will have, so but I want to trend the market on my 1 hourly time frame. And all I can see on my 1 hourly time frame is this structure, that this was a previous area of value on the lower time frame. Are you getting it? This was previous resistance, turn support, that broke out and turn support, but we are breaking back into it right now. So to me, this is a change of character to the downside. I'll consider this as a break, as in this was a break to the upside, a break of structure to the upside. Are you getting it? And this was the last low of that particular structure to the upside. So to me, this is a change of character to the downside. And change of character, what happens? The market retraces just to 0.382. If it goes more than 382, just know that the market has switched and continue to the upside. So I'll bring my Fibonacci in, which is my third confluence. The reason why I'm selling, that's the reason I'm telling you the reason why I'm selling right now. So the market is supposed to start selling from 1929. I guess it's 1929 to 1930, because this was, the previous resistance the previous support has broken right now, turned resistance to the downside. So the three places the market is supposed to not go more than is 1933, which is 1933 to 1929 to 1933 is our sell zones. Are you getting? So if you are taking trades from this area, no problem. Your stop loss should be above 0.5. Anything that is making us break above 0.618, which is at 1939 or 1940, this trade will invalidate. So I'll be taking from 1929 to 1939. That's 100 pips stop loss. Are you getting it? Then sell all the way down to this next area of value that we broke. Remember this area? I'm selling to the support area. So I'm selling to 1950 area from 1929. That's about 140 pips to the downside. I get it. So it's a very good risk to reward ratio. So I'll be selling. This is what I'll be looking at. So depends on how you're looking at your market. How you're looking at your market. How many risk to reward is this? 1.5. It does not make sense to me. I always look for 3 to 5 risk to reward. You getting it? But definitely, I don't have a choice. Today's Friday. Today's Thursday. Tomorrow is Friday. So this is what I have. So I will use a multi-asset analysis to see if truly this market is going to sell down by going to shake EURUSD and GBPUSD, whatever is happening with them. So on EURUSD, on the daily time frame, let me go to the daily structure. Okay, this is EURUSD. This is the daily structure of EURUSD, and EURUSD right now is okay. It has come to take this liquidity already. That's why it's bouncing on the lower time frame. You see, but since the daily structure, what do? Go to your 1 hourly time frame. The trend is happening there on your 1 hourly structure. If you could remember yesterday, we had a break of structure to the downside. I guess we have a break of structure to the downside, and this was a supply zone that caused that break of structure to the downside. So we slowly moved to the upside yesterday, came back into that supply, and had this last sell in that FOMC period. So to further trend this particular structure for you, you will see that on the 1 hour time frame, the daily time frame structures are trending perfectly well. So what do we have on the daily structure? These are what we have on the daily structure. So as it stands, as yesterday, I told you that the difference between the upside and the downside, not even the difference between the upside and downside. Look at, we had this structure yesterday on the lower time frame. So if we have this minor structure, we had this major structure, the 1 hour time frame. So these were the two areas yesterday you're looking at that this market is either is going to reclaim it or it's going to come down. So yesterday we broke back into the structure. We broke up into it before, came to supply, found supply. So these two areas right now, I think these two areas, these are your supply zones. So if you bring your Fibonacci trend, if I should take this a bit, okay, I'll take this off. I'll take this a bit. I'm on that supply, I'm on that trade already. getting I'm on this trade already. So I just take this up and show you something that I'm saying. So as you're seeing right now, these were the two major areas yesterday, right? This area, this whether I like it or not, this is a resistance zone because of the previous support. So these two areas are the Q zone. If I go my Fibonacci trend extension tools and you see that it corresponds into that Q zone. Are you seeing it? So the market of MACD, your Fibonacci retracement tool is very, very important. Where the market does not retrace from 0.5, definitely it wants to come to this previous area, which is the Q zone, 1.0690 area. I get in before doing what? Coming to the downside. So don't look at that, oh, what is this? Anything that is making us break above these two places again, this market will do what? Continue to the upside. So if I'm going to take EURUSD trade, my trade will be from my sale will be from 1.07676 or 675, and the second one will be 1.6900. I guess those are the two trades I'll take, then put my stop loss above 0. What's it called? About 50 pips above, or 50 pips above, is it 50 pips? 690 to 710 is about 20 pips, and this is about 50 pips. So my stop loss will be above here, first of all. Then take this trade as I'm on that trade already, but if I'm taking a new entry, this is what I'm likely put my stop loss. Take my first one here, take my second one here. I get a small one here, then a bigger one here. I get in these two entries, then these Q zone entries, then continue to the downside. And the reason I'm going to continue to the downside is because of this. Just hold on, let me show you the reason I'm continuing this market to the downside, because there are more liquidities at the downside. So I'll go back to my daily structure. So my daily structure, reason why I'm going to continue to the downside is because there are still more liquidities in these empty spaces you are seeing here. So because this is a major support, and support I'm looking at the market to come back to before continuing to the upside to find more resistance at this resistance zone. If it's going to come down, we're going to know. So these are my daily structure. So I'm going to trade daily structure the way I see it, because I consider this as liquidity and it's just a minor pullback to continue the downside. Are you getting this? So the reason why it's even pulling back is because it took a little liquidity. So definitely there are a lot of orders that were, stop losses that were placed there, and there were a lot of orders that were placed here. So definitely it's going to trend back to find more resistance before coming, find more supply at those resistance areas before, coming back to the downside. That's for EURUSD. So if you are trending back to the upside to that minor resistance at the upside, definitely gold should do what? Trend back to the upside to try and see if it can, come back to 0.382 before coming down. Are you getting? So that is for gold. So I'll apply GBPUSD to it also. GBPUSD, did you take this? Did you take it? Yes, it has taken that liquidity also. GBPUSD has taken that liquidity also. So liquidity concept is very important in this trading. Are you getting? So if I should zoom this very well and check if we actually took liquidity, because a lot of people don't zoom. You getting? So the market started from here, even though it's by a pip. Very important. So coordinates. Let me copy this coordinate and put here if it's accurate and took the liquidity. It has taken liquidity, so definitely if you go to your 1 hourly time frame, you'll definitely see a bounce. So you're looking for what? You're looking for two things. You're looking for a bounce to happen at those after taking liquidity back to the next area of what? Value. And where is that? The last lower high we had. So this is the last low. So definitely I'm expecting a bounce back to the 0.618 Q zone, which corresponds with our previous support return resistance before continuing the sell to the downside to take more liquidity. So these are places I'll be selling from if I'm a GU trader. And these are the places I'll be selling from if I'm an EURUSD trader, showing you. Then if I'm a gold trader, we've broken to the downside, so I'm waiting for a sell back to this, daily, what's it called, pressure trend line. I get in these areas, I get, we might get a spike, come back to these areas, but at least my stop loss should be above 1935 to 1940. So my stop loss at 1940, if possible, even 0.786, which is 1943. It depends on the volatility I'm seeing in the market. Before, if I'm to adjust my stop loss, I'll know. But if we are breaking, if we are breaking above these, what's it called? If we are breaking above these falling wedge trend line that is coming from the top, that means this trade has been invalidated, because on the Farley chart, probably use your Farley structures to find out if we are closing a candle above this bearish pressure trend line. Are you getting it? That trade has been invalidated. So these are confluences you should use in trending your market, and don't FOMO. Why is this thing coming up? I didn't want to pay because what's the point? Because I don't use many indicators. The reason why you use a paid account for trading views, because you want to use a lot of indicators. I don't need a lot of indicators. I'm a market structure. Sorry, I'm a price action and a market structure trader. Why should I? It's necessary. It's necessary, but I don't see it as, I've seen a video where someone say that you are following a mentor and is using a unpaid view. Are you sure that he's making money? That's your own opinion. I'm just giving you why I don't need it. Are you getting? So I usually pay. If you go to my previous video, you see all my premium status. I call myself the market messiah, so definitely I should know, with experience and how the knowledge I have, what decisions I should be making in the market. So I've done what EURUSD, GBPUSD, and what's it called? Good multi-asset analysis for you right now. And what I can see, combining these three assets together to see where they are moving, probably where this one is going to reject from, where this other one is going to reject from. The liquidity concept I'm seeing on EURUSD, the GU liquidity concept I'm seeing, also apply that to gold and see that definitely, if I should go to the Farley structure, if GBUSD, was it gold, should continue, definitely we're trending back to this low of these, what's it called? First of all, we're trending back to 1914, 1915 area, to these previous supply zones. Sorry, previous area of value, or the daily, what's it called, ascending triangle, that will minor support we are having here. So definitely we might be trending back to this minor support area, then try to see if we can trend back. But definitely the market is still finding resistance, meaning that the market is still bearish and might travel all the way back to $1,872 area if tomorrow and the next candles, as in supplies, are coming in largely for good. So these are my trading plan and my trading game. If you're interested, you know what to do from here. I don't have to tell you that enter from 1929 or enter from 1930. You have your risk to reward to it. You have your, what's it called? You have your, what's it called? You have your money, your capital. Apply risk to reward, what's on risk and money management. Check your risk to reward. If it's worth it, put in your $1,000 to make $2,000. Oh, my battery is down. Okay, I'll end this video here and try and see if I can upload this before my battery goes off. Take care and bye for now. Bye bye.